Hi, ladies and gentlemen, and welcome back. Lachlan Ellsworth here, building again on the instructional video that we did on trend measurement, stair stepping, and of course first against the trends. Another thing that came up during the Back on Track intermediate trading series was the fact that a number of people stepped up and said, "Lockie, I really need to know how to measure trend. Can we have some live examples of what trend measurements like? But we can also have some live examples of how to measure volatility." Now, what I've done tonight, ladies and gents, is I've actually grabbed a live S&P chart, 377 tick chart from tonight being the 10th of December. What I want to do is actually use this chart as an example of what was available tonight. At the same time, more importantly, I want to show you the mechanics behind the trend, the stair step being broken, the big picture buy signal that was available, and how you could have actually taken advantage of that. Most importantly, I want to show you how to measure the initial but also the interim volatility, so you can in your own time be able to trade a chart like this and take advantage of exactly the signal that was actually formed tonight. Now, first and foremost, let's start from the left-hand side. You can see here we are in a downtrend, and for those that do know what I use in the pre-market, I'm actually after a 3.25 point downtrend. Now we've actually gone from a price high up the top there of 1099.25. We're down at the moment here at 1094.25. So we're definitely in that 3.25 downtrend. Now, you'll see here I've got a DS high, and I've just placed an arrow here for you, that little arrow there. Now that arrow there is the zero, that literally indicates the zero candle, and it's the zero candle that we use to measure our stair stepping. Now, why do we have stair stepping? Again, like we discussed in the previous lesson, we want to ensure that if the trend remains intact, that we don't take a buy signal, or we don't take a first signal against the trend. The trend must be broken, and it just so happens, two candles to the right hand side, that's exactly what occurred. Okay, so the trend was broken, the little black line had price go above it, which means that we now actually have the freedom to trade in both directions. Okay, again, the reason that we want to know the trend is broken, that we can actually take a buy signal. If the trend is not broken, then the buy signal would actually be a first against the trend, and that is not something that we would want to be taking. Now, what happens is we bop down here, and we actually pick up a really textbook big picture buy signal. And for anybody that trades the US 377 tick in this time frame, you can see that's an absolutely textbook big picture buy. Now, one of the key points about today is I actually want to show you how to measure volatility. So let me get a measuring line in here, and what I want to do is actually oh, that's an arrow. That's not going to help us. Hang on a sec. Let me just get rid of that. Let me press the right button for you. You can tell it's live, can't you? All right. Now the first line I put in for you there is in fact the initial volatility. Okay, that's the initial volatility. It actually corresponds with the zero candle of the first DS move that was going to give us our big picture buy signal, and we go to the highest point. Now the low point there was actually 1093.50. The top point is 1095.75. So we have literally a 2.25 initial volatility. Now, if we take it one step further, what we can do is also measure interim volatility. Now, I'll put a line in there for you, measuring interim volatility. This is again an indication for us as to how aggressive the buyers are going to be if the buy signal confirms. Noting we can now trade in both directions because our stair stepping has been broken. Now, what happens? We pick up an absolutely textbook big picture buy signal. Now, my focus was firmly fixed on the European market tonight. For those that were trading the S&P 500, the big picture buy signal in this time slot has a 3-point target and a 3-point stop. Okay, that's for the most basic traders. For the more aggressive traders, you can go a 4-point or even a 5-point target and a 3-point stop, just depending on what you're most comfortable with. Now, what I also recommend strongly, ladies and gents, if you are looking at the S&P, Euro S&P makes no difference, have an auto trailing stop, or make sure you've got a mechanical stop strategy in place that actually follows the market as it goes. Now, what I use on the S&P is a 1.5 auto trailing stop. Now, in this case here, what has happened with the signal tonight, it's actually confirmed at 94.75. it's actually gone up 1.25 points, so not far enough to trigger the auto trailing stop. It's then gone against by 1.75, so it's getting a little bit annoying, but it certainly hasn't gone anywhere near the 3-point stop loss, and then it's turned around and started to climb. It's only when it's climbed here to 1096.25 that it's actually triggered the first of the auto trailing stops. So what you're doing is, as the market moves in your favor, you're limiting the amount of money that you can lose progressively, and you're doing that to basically lock in more and more and more profit. Now, for those that are new to trading, if you're brand new to trading and you want less to think about while the market is moving, then an auto trailing stop may be a really good way to go. So here we are at about 1.5 points into profit. Here we are at literally 3 points into profit. What has happened? It's just kept on going. So for those people that were trading aggressively tonight with a 4-point target, you could have got there. You could have got there quite happily. Even if you were new to trading and you're using a 3-point target on the S&P, we all know that each point is a 5% return. So 15 or 20% return was up for grabs on the size of your traded position. Now, another point that we can raise on the video tonight is the fact that you can see here our DS is fatiguing. Okay, and for all of those that came to the Back on Track intermediate trading series, you'd know that if your DS goes over 90, particularly on a big chart like the 377 S&P, that it actually means one of two things. Either the market's going to trade sideways or the sellers are going to come back in. Now, our first DS peak here, you can see we actually traded sideways for 4 candles. The second DS peak up the top, what happened? The sellers came in, and they actually came in quite aggressively. What happened is we then rose back up. We've got another DS fatigue. Guess what? We've traded sideways now. In fact, we've traded sideways for about the last hour and a half, and you can see there, right at the moment, we're literally 285, 285, now 278 transactions left on the current candlestick. All right. So key points, ladies and gents: volatility. We've got our initial volatility here. We've got our interim volatility here. An absolutely textbook big picture buy signal on the 377 in the US pre-market tonight, powered by the European market. A big upsurge in the European market tonight. Absolutely brilliant trading was up for grabs for anybody that trades this. All right, ladies and gents. Look, I hope that's been helpful. Every time we come up with a new lesson that needs to be taught, we will publicize it to you straight away. So again, you can start to refine your own trading, start to refine what you're doing, and ensure that you're measuring exactly where you need to measure in order to trade the strategy profitably. Have an absolutely fantastic trading week, be it E-minis or Forex, whatever you're trading. Have an absolutely fantastic week, and I look forward to updating you as soon as required. Have a brilliant night and a brilliant week, ladies and gents, and bye for now.